Welcome back. Siddhartha Khemka, the head of retail research at Motilal Oswal Financial Services, is with us now. Siddhartha, it's been about 10 days since the earnings season began. Could you give us a sense how it's played out? Have we seen, on the whole, EPS upgrades or downgrades? It's largely been between IT and banks that we've seen the numbers come through. And where is it that we've seen a positive surprise that you would recommend a buy because the valuations still are attractive?
So very good morning, Rima, to you and to all the viewers. So yes, largely the result season has till now been centered around the IT companies and the banking stocks. Some of the bigger other banking names that will come out results, ICICI, Kotak would be towards the end of this week. But so far what we have seen is overall the results have been in line to better than expectations, not disappointed the market so far. Usually the culprits, or you can say, they come towards the end of the quarter season, which can drag down the overall earnings. But as I said, so far not disappointed the market. IT has been actually surprised the market with in line to better the results. Some of the companies have given out even upped their guidance. For example, Infosys upped their revenue growth guidance, and margins have been pretty better to in line with expectations. So I think IT as a space definitely surprised the market on the higher side. The street was discounting weak numbers. The outlook for the next 2 quarters continues to remain hazy. But what remains pretty good is that the long-term outlook for IT continues to remain strong. Deal order pipelines is pretty strong, and that should lead to long-term outperformance from the IT players. As I said, near term, there could be some weakness. There are the fear of the US recession, European slowdown that could keep some of these stocks under check. But from a long-term perspective, we are positive on IT. We are recommending top picks from the IT space are Infosys, TCS, HCL Tech. Coming to banking, I think results so far have been strong. HDFC Bank, IndusInd, we had some of the smaller banks, Federal. Overall, the expectation from the banking space is that it would be the single most sector which will drive the earnings growth for corporate India in Q3, and led by some of the PSU banks where the delta is even higher. So overall, I think banking would continue to do well. We are seeing credit growth being pretty strong. So core business is something that is driving the banking space. Provisions as well as asset qualities both are under control and looks pretty steady. Valuations are you can say spread across the space. Some of them are pretty attractive. Say for example, IndusInd, there were still concerns on its niche segments, be it microfinance, be it the vehicle finance, but that is showing stability now and showing signs of improvement. While on the other side, Axis is another one where valuations is still comfortable, and we are expecting good numbers. Stock has corrected in the recent past. We see good upside on these two, apart from the usual heavyweights, the ICICI, SBI and HDFCs of the world.
So there is, a common narrative playing out, right, where the expectation is that money could move out of ICICI Bank and into HDFC Bank, and HDFC can correct its long-drawn underperformance. What are your thoughts? Would you go with that? And how are you approaching these two names now, apart from Axis, of course, that you spoke about?
Yeah, so I think if you specifically look at HDFC, there has been some kind of underperformance. We have already seen some money moving out of ICICI into Axis. But now, yes, there is an increasing interest towards HDFC Bank. With the merger now coming closer, yesterday there were some news flows regarding how the merged entity could see some more inflows from MSCI, some of the FIs that could increase weightage post the merger. And I think that is driving the short-term performance. But as I said, if you have a long-term fundamental view, I think HDFC is doing better, but still valuations are fair. They are no longer in the expensive zone. Outperformance, we are seeing more from something like an Axis and IndusInd. So it's like a performer rating for us on HDFC Bank.
All right, got it. Siddharth, any new stocks that you've identified that you feel like right now is a good time to perhaps get into? Any new ideas?
Yeah, Pavitra. So what we are looking at is a kind of a manufacturing theme that we believe could do well in the current calendar year, even with the budget approaching. So Bharat Forge is one of our preferred picks to play that manufacturing, or you can say the capex theme. The company had a recent analyst meet where it highlighted that the core business have been stable both in terms of India business as well as in exports. They are planning to launch several new products in the EV space over the next 12 to 18 months. Plus, over the long term, the vision beyond 2025, the company is looking at several new technologies, including alternate fuel technologies, be it the hydrogen fuel cell-based powertrain solutions, advanced electrical engine chassis, some of the carbon fiber components, sodium-ion batteries, which will drive the long-term growth. In the near term, we believe that defense is now fully ready for Bharat Forge to take off. They've already won orders for armored vehicles from the Indian Army, and they are now expecting orders for artillery guns, they should be getting it by March, April of this year. Also, defense exports is something that they are looking at specifically for the gun segment, and they are looking at orders from the US segment. So overall, we feel that Bharat Forge is now entering time of harvesting whatever they have invested so far in terms of some of the other non-auto businesses. These businesses will expand the addressable market and provide good growth in terms of profitability.
Thank you very much, Siddharth, for joining in.